Good morning, investors. Welcome to the January 26th webinar presented by Portfolio Builder. Folks, my name is Dean Gallagher. I'm an investment consultant and partner here with Portfolio Builder. I want to thank you very much for taking the time to join us here today, folks. Welcome you in and just basically cover a couple of things before I hand over the microphone and the screen to Jason. So good morning, everyone. Welcome in. Truly appreciate your time. Okay, guys, so let's go ahead and jump right in here. Let's take a look at our portfolio structures. Okay, right here, guys, we have the Safe Alpha portfolio. We made some new changes yesterday with the portfolio structure. We dropped our silver position and replaced it with an inflation hedge that's actually working a little bit better than silver. Okay, that's with GBTC. All right. So a couple of these are our core positions here with the Safe Alpha folks. We started this portfolio exactly 2 months ago. And in that time, we've now created a profit of $232,768 that's open at this time. Okay. We just put in this position yesterday, so that's why you see the profits are a little bit lower. Or I'm sorry, this actually just got put in this morning because I actually had a paper trading error. I was able to do this to my cash accounts and my actual accounts, my 401, my IRA, but I was not able to do this on my paper trading account for some reason. Thinkorswim gave us an error, but they let us put it in this morning. Okay. Next, guys, we have our position here in ERX. This is a nice value play here with the largest oil and gas producers on planet Earth. These companies are actually trading at a 30-year price dislocation currently. So there's a nice value opportunity here. Okay. Next, let's look at our growth play. Okay, so this is the TQQQ ETF, folks. This is no joke, the number one performing ETF that's ever been created as far as total return in its lifespan that it's been in existence. So this ETF, folks, no joke, okay, is up over 11,000% now in the last 10 years and 11 months. So just incredible growth here. It's running at 18x the compound rate of the QQQQ ETF. So there's some leverage built into this with quantitative easing, folks. We are certainly recommending some leverage here for the first time. And we're not just net long, any one stock or any group of stocks. This TQQQ position, folks, it actually has 103 of the best companies on planet Earth today, and really attaches you to the deepest monopolies that have ever been seen in business on a global scale. In the United States, you name it, the companies inside of this TQQQ ETF have absolutely monopolized the world. And they're the owners of these firms, guys. They're going to make sure that they ensure themselves that they go from billionaires into trillionaires in the next few years. And if our clients are smart enough, they're going to go from wherever they are into the next status with their help as well. Okay, so pretty cool, guys. That's our value play. Now, you wouldn't want to just own any of these assets individually. You want to have a beautifully balanced portfolio that hedges itself against each other. Okay, so we have four different assets, completely separate assets, right? We have our inflation hedge. We have our massive value play here. We have our growth play here. Okay, and then we also have our volatility hedge. So it's really nice, guys. With all these positions, you just have four completely different assets that are actually going to hedge against each other. Okay, and we also have our disaster insurance here with UVXY. And a lot of people don't realize this, but this is the easiest way to get some really good protection to your total capital structure. Okay, and right now it represents just over a 10% position. Okay. And folks, important to know here, when the market crashed up to 34% in last Q1, this ETF actually went up 1,227%. So if you just had a 10% hedge in place, you actually kept your total account value safe, and in fact made a 22% profit from the growth of this ETF. Just having whatever 90% long, 10% hedge with the UVXY, you'd literally make a 22% profit because this UVXY position went up 1,227% as long assets fell. Okay, so just real quick, guys, that's the overview there on the Safe Alpha portfolio. Okay, next I'm going to go ahead and cover our Absolute Alpha Bootcamp portfolio. Okay, so Safe Alpha has been our most popular product, folks. That's now made 23.3% in right at 2 months. Okay, or $233,000. It's our most popular portfolio by far. Okay, because it's real simple to utilize. Okay, we'll probably make somewhere between 5 and 10 changes a year to this portfolio. We actually just made our first change for the year yesterday. Okay, so pretty cool, guys. Let's go ahead and look at the Absolute Alpha Bootcamp portfolio. This portfolio has been open for just shy of 3 months. Actually, Thursday will officially be 3 months since the inception of this portfolio. And it's really neat that we have an equity side in our boot camp. Okay, that's up $34,000 in open profit, or well over 34%. We also have locked in gains just shy of $15,000 there as well. So net, guys, up just shy of 50% here on this portfolio. This is our most aggressive portfolio structure, and it's referred to as the Absolute Alpha Bootcamp. Some people just call it the Bootcamp portfolio. Okay, but certainly our most aggressive, and it's going to be playing smaller asset classes. Okay, so this is what the allocation looks like here. So we're going to have assets that balance each other. Once again, we have our growth. Okay, we have our value here. Okay, this is in the most beaten up oil. This is actually the most beaten up ETF in 2020, and it's providing a huge value in 2021 so far. Okay, so pretty neat. We've already taken off 100% gain on this. We're looking for more potentially on Gush, okay, at this point in time, but we may actually bring this out of the portfolio, and our clients will see what that looks like if we do. Okay, next, guys, we have NUGT. So this is all of the gold miners. The price of oil is pretty low. The price of gold is at new all-time highs. So it's a really nice opportunity there. Next, we have MJ. So this is a play on the marijuana space, folks, in that evolving business model. Okay, it's going to be something a blue oval office will push pretty hard. That's been pretty obvious. So we're going to attach to it. Not a huge position, but definitely a good area to make some nice gains with. Okay. Next, we have a different volatility hedge. We have the VIXI. Okay, so this will help in the disaster insurance scenario. Okay, help protect the account a little bit there. And then we also have exposure to GBTC or Bitcoin. And it's neat, folks, because with your 401k, your IRA, your TSPs, if you're up in Canada, you can actually buy into this equity, guys. And because you can't buy Bitcoin through a 401k and IRA, a tax deferred account. But with this ticker, that's actually a nice little way to get around that scenario. So real quick, guys, that's a look at the portfolio set here. Okay, and that's our model portfolios here. Okay, and then what I have here, guys, on the right-hand side, okay, is our sign-up page. And we have some we have some of our clients on here reporting their gains since they've started. Gary here made $10,800 in 24 days, or 102% profit with our cryptocurrency portfolio, guys. That's actually an added bonus that's completely free when you sign up for the Absolute Alpha Bootcamp. Okay, we will be breaking that product out into its own separate product, and we will have its own price point. But for now, guys, when you sign up for the Absolute Alpha Bootcamp, that's actually a freebie. And Gary made 10 grand in 24 days with that cryptocurrency portfolio. Okay. So kind of cool. Jason has an incredible track record, folks, of building out cryptocurrency portfolios. In fact, in 2017, he actually produced over a 1,000% return for the year. The last time he built a cryptocurrency ETF, and has recently done that again. Okay. So once again, guys, that's the free bonus that you get when you sign up for the Absolute Alpha Bootcamp today. Okay. Philip here, he's a member of the Safe Alpha. And he was in the webinar last week saying he's up $18,000 or 25% since starting in October of 2020. Super happy guy. Philip's actually a pilot that's on furlough right now, that's having some fun making money with us. Okay. So with that, team, that's really kind of the gist of what we do. Okay. And what we're going to help you all today is help you guys get some portfolios built out. Okay. So you can see our clients, talking about what they've made. with the different programs and stuff. Okay, and Michael here started with 125,000, is now scaled to $250,000 over the span of 3 months. Pretty cool. That's a huge vote of confidence if you work in the investment world when someone doubles the capital they're using behind you. Okay, and it's always nice when they say love the service, right? So very cool. And so, guys, you could go through here on this page, right? All you want, you can meet all the different clients that we have. Jerry's a great guy in New York City. He brings us a lot of clients. Actually, he's really good at promoting the quality of our services for us, just to his friends and his network. So that's been pretty cool. Murray has a quite a substantial amount of capital behind us. I think he's kind of one of our top 20 clients as far as total investment capital structured behind us, well into the 7-figure mark and above it. Okay, and some other people, guys. But go through here when you have some time. Take a look at this. Okay, and it's just really neat to hear from our client base as far as what their experience has been and why. So, with that, folks. I'm going to go into a few more things, and then we're going to hand it over to Jason to get some portfolios built out. Okay, so make sure, guys, think about the cash you have on hand at this point in your brokerage account. Okay, and certainly, let Jason know so he can get a portfolio structure built out for you. Okay, and pretty cool, guys. We do let you take the test drive here with our company. We let you put your capital to work, okay, see how it performs, and then you can basically decide if the system's right for you. A lot of our clients have made. I think we have over 300 clients now that have made anywhere from $1,000 to $20,000 during their free trial. We have now it's 5 people officially that have made over $40,000 during their free trial, and our top trial student actually made $97,000 during our free 1-week trial, and it was really neat, guys. He did that in the largest sell-off week of 2020. Why? Because we have defensive positioning in our portfolio structure, and we're scaling some of that back. So real quick, folks, my name's Dean. I'm going to hand it over to Jason in just a minute here. We're both partners in the firm, so just ask us any questions you have under the sun. Okay, we're going to take a look at what 25% a year can do for your money. Okay, compounding equals wealth. We're going to look at risk parity investing, folks. This is the strategy I guarantee you've never seen before. Okay, but it's a really neat way to invest safer. Okay, so you guys are going to learn the billionaire system today. Number 4, we're going to have Q&A for attendees, so you guys can ask questions live with Jason, your Chief Investment Officer. Okay, then we're going to go into live portfolio buildouts. Okay, so you can safely invest with us. You can use real capital, okay, or you could paper trade to see exactly what the performance looks like. Number 6, our advisory service. We're going to explain those in detail, guys, and cover our special offer. Okay, and just real quick, guys, we only allow 3 clients a day in for superior service for each portfolio. So just know that. And if the add to cart button is not functioning on our website, that means we are sold out of that portfolio for the day. Okay, if you have any questions, give me a call, 505-322-7515. That's my number, folks. My name is Dean, and I'm here to answer any questions you have during your trial. So feel free to call me or text me at any point on that number. So, folks, let's look at the power of compounding. And really, it's a bit different today, right? So compound interest is the 8th wonder of the world. Einstein said this about 70 years ago. And while at that time, guys, interest rates on bonds were actually, interest rates on just savings accounts were pretty good, and interest rates on bonds were incredible. But it's not today. So you actually have to compound growth. Okay, so it's a little different today. But let's look at the power of compounding, starting with $100,000 now, to understand why Einstein said compounding is the 8th wonder of the world. Okay, so you can see your year column here, folks, on the left. You can see the annual growth rate of your capital. Okay, pretty cool. If you've never done this, I do this type of modeling with my son quite a bit. Just to really teach him the power of compounding, and he's really starting to get it. He's 7 years old, and he's pretty sharp. Okay, but let's take a look at this, guys. So year 1 through 3 here, your money starts to snowball a little bit. okay, and start to grow. It's starting to grow at the annual growth rate, and it's pretty incredible, guys. Because with just over 3 years, you're able to double your money at 25%. Now, if you do 25.31% like we did in 2019, you'll actually double your money in less than 2 years' time, or less than 3 years' time. Okay. So let's look at year 4, year 5. By year 5, guys, at $61,000 a year in growth, you're actually beating the average household income in the United States of America, and you've now put a 3x factor on your capital. Not too bad. Okay, let's look at down at year 10 here, guys. This is incredible. By year 10, at $186,000 a year, you're actually growing capital at a faster rate than the basically all but 2% of the world's households make for income. So you're not working for your money, or money's working for you, and it's growing at 186,000 a year. And you've now put a 9x factor from your starting capital within a decade. Not bad, right? So now you guys will probably start to understand why the richest people on the planet have the majority of their wealth in the stock market. Okay, let's look at this years 11 through 20. Holy moly, does this compounding start to get going on the second decade, right, of being invested. All right, by year 15, folks, you'd be making $568,000 a year in growth of your capital. And by year 20, okay, you're growing at 1.7 million a year. That's your money working for you. You're not working for your money. And you've now put a 86x factor on your money in 20 years, and probably have a pretty significant legacy to leave to your family, charities, nonprofits, whatever you like to help in the world. Okay. So kind of fun to see what 25% a year looks like over 20 years, right? Now, the average return of the S&P 500 is currently 10%. So you need a better strategy than simply owning the S&P 500 to achieve this. We're here to help. With the creation of ETFs, this is made incredibly simple and safe. Okay, so there's literally an ETF that you can own to position into all big, unstoppable trends. We're here to make sure you have the right assets during your journey. Now, let's take a look at why Portfolio Builder is different than advisors, mutual funds, and hedge funds. Okay, guys, and quick note, we're not a financial advisor. We're not a mutual fund. We're not a hedge fund. What we do, folks, is we design a beautiful risk parity portfolio for you to build with your capital. Okay. It's going to take you about an hour a year to follow everything that we do to grow your money with us. Okay. And with our help. Okay. But once again, guys, we are not going to manage your money. We have no interest in that whatsoever. We want you all to have full and complete control of your capital. Simply build it in the exact same cohesive ecosystem that we build, and you just do that with your capital. It's really easy, and it's going to take you less than 1 hour a year to complete the logistics side of growing your money, okay, with your brokerage account. So you have major advantages over traditional advisors, mutual funds, and hedge funds working with Portfolio Builder, okay? So what are the advantages that our customers really like? Okay, guys, our clients, and especially our really wealthy clients, love always having downside protection built into the portfolio. Okay, safety, right? Number 2, you will always have control of your capital. Okay, once again, guys, no one's going to be managing your money. There's no possibility of some type of Ponzi scheme or something. You have full and complete control of your capital. If you need to free up 50 grand to pay for a car for the granddaughter or something, you can do that. Okay. And you're not going to have any type of early withdrawal fees or cancellation fees that you're going to have with the advisors, the mutual funds, and the hedge funds. And these can be really costly, folks. I actually know a couple clients that liquidated some mutual funds and just got nailed on fees more than the cost of our membership. Just nuts. Anyways, number 3, guys, you're going to learn everything we have over the past 3 decades. Then you can relay this to family for a multi-generational impact, right? So not only are we going to help you, but we're going to educate you on everything we've learned. Okay. All advisors and funds keep you uninformed, and frankly, want it that way, right? They want to keep you uninformed. We want to keep you as informed as humanly possible, so you guys can truly understand what we're doing and why. Okay, number 4, folks, we have a flat fee that won't grow when your account does. Okay, number 5, we have live interaction with your chief investment officer. This won't be found with any other finance firm, period. And you're going to be able to meet with Jason every single week. no matter which portfolio you choose. Okay. So live interaction, guys, is so good for building the confidence for what you're doing with your money, and the education is top notch. Okay. Jason is a phenomenal educator. Today is what you're going to see just the tip of the iceberg compared to what we're going to offer you in the service. Okay. So number 6, it's really cool, guys. When you're just following our structures, right, and you're not in some huge hedge fund, you can liquidate, you can buy and sell literally within seconds, right? After you get your trade alert. The big funds take weeks to do that, guys, right? If they're buying an asset or liquidating an asset, it's multiple days and weeks to get in and out of positions. Okay, so we're going to get safety and ROI advantages that will keep you safer and add larger gains to your account. Okay. So we're going to focus on my favorite rule right here when it comes to investing, guys. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. Who did that come from? The wealthiest investor on planet Earth today, Warren Buffett. Okay. That's why we always have downside protection built into the portfolio, because we never want to lose money. Okay. And we don't want to forget that rule. So what's the number one unknown risk to U.S. investors today? And I talk to so many people each day that have a ton of money in cash. They have no idea how incredibly dangerous it is, and that they're going backwards by about 10 to 15% a year. Okay, so guys, cash in your account, that is the number one unknown risk to U.S. investors today. Most people I'm talking to do not realize they're losing 10 to 15% of their cash value every single year, depending on where they live in the United States. Okay. And there can actually be pockets that are higher. Okay. So Ray Dalio said this very famously last year, and it couldn't be more true today. Cash is trash. And it literally is, guys. We'll get into more of that in just a second. So did you know your cash is burning up sitting in your brokerage or bank account? Well, why? The Federal Reserve is printing money at the fastest pace in U.S. history. So you can leave your hard-earned money in the fire, or you can learn to invest it safely today. Okay. So investors, we have a webinar only available special today. Stay tuned to see what the savings is that you can take advantage of today. Just an important note, guys, we do simply allow 3 spots per day per portfolio for superior white glove customer service. And with that, Jason, I'm going to go ahead and hand it over to you, bud.
Okay, wonderful. Let me go ahead and get onto my screen here. Okay, great. All right, guys. So we're going to walk you through our trading plan. And then we're going to build your portfolio out live so you can test drive the system itself. And really, our goal is for you to pay off the cost of our subscription during the free trial. Now, what are some of the profits you've seen in the last 2 years during a free trial, Dean?
Really, we've had a pretty broad range, Jason. The highest we've seen was $97,019.89. That was from Ron up in Wisconsin. Did an incredible job and actually made 97 grand during the biggest sell-off week of 2021 because of our defensive positioning. That was good. And now we have 5 people that have made more than $40,000 just recently, actually. And then we have somewhere over 300 people that have made anywhere from $1,000 to $20,000 during their free trial too. So certainly, guys, we're going to give you a great opportunity to literally test drive exactly what we build, our exact product. Okay. And so that way you can test it out, feel it for yourself. Okay. And decide if you want to outperform the market with us.
Okay, great. And so right now we're clocking a 7% return in December and up 12% so far in January. So I guess we'll have to close up shop by February because we're going to hit our 25% target too quickly. Just kidding for the crowd. Just so you know, if we hit 25% target profit, we're not going to turn off the money growing machine. So let me show you guys why we're actually anticipating better than 25% return for the next 5 years, and exactly how we're going to get you there. And more importantly, how we're going to get you there in the safest manner possible. Our niche is really taking care of people who are either about to go into retirement or who are in retirement. And what you all have in common is a loss of income and a better need to protect wealth and have a safer strategy. So what we're going to really show you is might be counterintuitive. We're actually going to take your capital and put it into some special ETFs that are going to leverage your assets. And we're going to do it in such a safe way that you're going to essentially, you're going to nearly triple your net worth the second you start following this program. But we're going to reduce your downside risk by 90%. So you're just going to be seeing that risk parity is a far smarter way to play the markets. And it's really Ray Dalio's strategy. We're not trying to take credit for what we're about to lay out for you. But in the last 2 years, Dean has brought on board over 1,000 members, and it's just been by giving away the trading plan. People make money, they see it works, and then they want to get our updates and trade alerts as we slowly but surely optimize the portfolio. Okay, so this is going to be quick and easy to understand why this works and what our expectations are. What I have on the screen right now is the QQQ ETF. This is the NASDAQ. It's the third largest, most liquid ETF in the world. Only above it would be the SPY in emerging markets. And this is going to be targeting the gigantic tech giants. So we're talking about Amazon, Facebook, Google, Tesla, PayPal, Comcast, NVIDIA, Microsoft, Apple. Okay, all those great companies that have just insane monopolies that are buying back their own stocks, that are the primary benefactor of all the massive retail call option buying. And what we're really going to see is that these guys have such an insane advantage. This is where we're going to park most of our cash for the next several decades in your retirement. And everything else is going to be designed to protect that position. So we're going to look at why we want to own these tech giants, what risks are involved with that, and how to hedge against those risks. Now, it's really important to really see the power of what we're going to show you and why it's so much better than what you're already doing. I know a lot of you listening to this, you already own some Apple, some Facebook. You know, you already own these companies individually. You might even own the QQQ ETF, which is fine. But I'm going to show you how to get a far better return with way less work. So if you had bought the QQQ at an all-time high in 2010, right after we came off the housing crash in 2008, and then the government freaked out and they bailed out all the bankers when Obama took office, basically printed $1 trillion at the start of 2009. And that's what began making financial assets bubble up after that crash, was again, printing trillions of dollars. And I'm going to show you exactly how much they printed in 2009, 10, 11, 12, all the way to current. And then we're going to compare it to how much money they're printing today. And you're going to see that they're printing money at least 5 times faster. So we're going to actually anticipate better returns for the next decade than the previous decade. And this is all going to make a lot of sense in a second. But look at this. If you bought in 2010 at the all-time high, after a financial crisis, after quantitative easing was already a year in, okay, so we're not even a year into QE this time, which is why I'm going to tell you today is a great day to build this portfolio. But you turned you're able to generate a 583% return. So you turned every $1,000 into $5,800 in just barely over a decade. Not a bad return. But what if I could invest in the exact same group of companies and deliver 17 times the profit? Okay, 17 times, which means instead of turning $1,000 into $5,800, what if I could invest you in that exact group of stocks, and instead of getting 5,800 bucks out of it, you're going to end up with $100,000. Okay, that's crazy to think about, but I'm going to show you it's absolutely possible with one single trade. So now I'm going to look at the triple Q. And so again, you might think if you're just, and wow, now it's up to, okay, so it just keeps going up higher and higher. That's the beauty of this product, is these tech giants are just completely unstoppable. So the triple Q is going to take every $1,000 you have to invest in that group of stocks, and it's going to give you $3,000 worth of equity. Now you might think that would turn into 3 times the return, but That's not the case, because as your profits grow and the returns compound, it becomes an exponential growth prospect. So if you had just bought $1,000 worth of the triple Q at the exact same time that we just looked on the last chart, instead of hitting a 500% return, you're up today, and this is just mind blowing, Dean, 11,000%. So every $1,000 invested is sitting at 110,000 bucks. Okay, if you put $3,000 into it, you'd be sitting on $330,000 in cash right now if you were to pull it all out and go, say, pay off your house. Okay, so that is just mind blowing. And so, again, what is making this group of stocks outperform everything under the sun? Okay, so this is where we're putting the bulk of our assets, about 65%. The other 35% you're going to see in a moment is designed to protect and guard your most important position. So if we're playing chess, think of the TQQQ as your king, and all the other positions are designed to guard and protect this single core position. So what are Apple, Microsoft, Amazon, Facebook, Google, Tesla, Nvidia, Comcast, and PayPal all doing? Well, they're doing a lot of stuff that gives them an unfair advantage. I'm just going to quickly brush upon it. First of all, these are owned by the richest people on the planet. Okay, there's really no exception. Apple is essentially Warren Buffett's all-in position on the stock market. Okay, he owns over $80 billion worth of Apple. Okay, his second largest position is 20 billion in Bank of America. Everything else is peanuts. I'm going to show you the way Warren Buffett's investing is very close to how we're going to design our safe alpha portfolio. Okay, so first of all, it's really important, rather than try to go pick some random company and pray to God that something great comes of it, we're going to do the opposite. Let's just copycat the richest people on the planet, and wherever they're going to put their money, let's do the exact same strategy. Okay, and so they have all their assets really tied up in their own companies. So that's the first and most important thing, is that our positions happen to be exactly what makes up the richest people on the planet. Okay, so that's step one. Step two, let's find the companies that are creating the greatest profits and have complete monopolies. Okay, these guys all have a monopoly. Okay, now a lot of people give Tesla a rough run, but again, that's only 3% of our portfolio. That's the hottest stock in the last 100 years. And if they pull off what they're trying to do, people are going to keep complaining about how overvalued it is for the next decade. So again, we have all the hottest tech companies outside of a few in China and Taiwan in this single ETF. Next thing these companies are doing is called stock buybacks. So not only do they have insane monopolies that are untouchable, they are sitting there and burning the outstanding shares. This makes their earnings per share go up. Get this, Apple grew revenues 2% year over year, but their stock price has doubled. In the last 5 years, they've burnt a quarter or a fourth of all of their outstanding shares. So these stocks are becoming more rare over time. Okay, pretty much everything else you can imagine, there's constantly more and more of it available. But these companies are the opposite. As time progresses, they become more scarce. So they don't even have to grow revenues, just monopolize the market and burn outstanding shares. So they're on track to do the greatest stock buyback program that they've ever done in the history of all these companies in 2021. Get this, 2020 was actually a record light year of stock buybacks. Okay, what else do they do? These guys actually have an unfair advantage to borrow money at nearly 0% rates. Get this, Microsoft last year was able to go sell corporate debt in Europe at a negative interest rate, which means they're getting paid to borrow money. What do they do with all this money they borrow? Well, mostly they're doing stock buybacks. Now, another big advantage, these guys are not just creating products and services and monopolizing their market. These guys are now acting like venture capital funds. Okay, so they have unlimited access to capital at the lowest interest rate of all powerful corporations in the world. They get the lowest interest rate and the most money on demand. And so what do they do with that? They buy out everything that's even remotely interesting in their niche. And if there's a competitor, guess what? They're going to buy them out too. Okay, then what's the last magic ingredient? Well, with everybody locked down and stuck at home and the government sending out free checks, these checks are creating record levels of call option buying on these specific names. You got to realize if someone's going to go pay 30% premium for a 2-week option on Tesla, the broker dealer who's selling that call option is going to buy 100 shares of Tesla so that they have almost no risk selling that call option. Okay, so we got retail consuming about 20% of the volume in the market right now, which is unheard of. It's usually with call options. Okay, so we're getting massive call option buying on these exact companies. And the broker dealer is doing the covered call strategy, so they can't lose if it goes up. So they buy 100 shares of Tesla, for example, and then they sell one call option. And as long as Tesla doesn't crash, they're going to make a guaranteed approximate 30% return on that money. It's insane for everyone. So we've got an absolute dot-com bubble forming until the Federal Reserve stops doing quantitative easing. Okay, so that's really an overview of what they're doing currently. What about what they're doing in the future? These companies are also pumping anywhere from 10 to $50 billion a year into a few key technologies. We're talking artificial intelligence and robotics. Okay, that's really the two big factors. So they're going to automate all the labor in their company, and then they're going to create AI with big data. So think of any sci-fi movie. This is the group of companies that will create that future. And so if you put it all together, these guys are really where you want to park your cash in retirement. And again, if we compare it to just normal investing, you're going to greatly underperform if you don't use the right ETF. So again, if you bought the QQQ, which is just a basket of these stocks, you made a nice 500% return buying at all-time highs in 2010. Okay, but if we buy the same group of stocks but get 3 times the exposure, okay, you can see that generates 17 times the profits. Because that's going to be our first core position. Now, the next thing I want to do is give you faith that the stock market will continue to travel higher. And to do that, we really need to understand what's making the cost of everything rise over time. And so what I want to point out is just a snapshot of our government budget. So this is our typical budget, and I can promise you one thing, it's going to get worse over time, not better. Just in October, for just a slice out of time, we spent $522 billion that month, but we only collected $238 billion. So how is that even possible? How did we spend $300 billion we don't have? Well, there's only two ways. Either we borrow money from savers, or we dilute our currency by printing money. Okay, so it's actually when your economy gets crushed and your government reacts and does huge fiscal spending that you end up in a situation where normally your bond market would fall off a cliff. It would get crushed. Now, rather than do that, which would stop all funding abilities for the US government, we do what's called quantitative easing. So I want to show you what's been happening. As we crushed our economy in 2020 with a global lockdown, governments worldwide have decided to spend aggressively more money than they make. And because the only other option would be going into an immediate depression. Okay, so the choice every government around the world is going to do until they've fully recovered their labor markets and got inflation targets back to their goal of over 2.5%. Their plan is simple: spend tons of money you don't have and try to get the economy chugging again. So let me show you how this works. Bottom line is, first we go and set interest rates at 0 at the effective federal funds rate. Okay, so that's exactly what we did in 2008, which gave you that massive stock market return over the last decade. We got another crisis, perhaps self-imposed, doesn't matter. We got the crisis. The government reacted as they always do. Huge, massive spending packages. They cut interest rates to 0. JP Morgan and other primary dealers now get to borrow money at an unlimited quantity to buy US treasuries, bonds, notes, and T-bills at a 0% rate. Okay, so as the government's dumping all this debt into the market, JP Morgan is gobbling it all up with the loan from the Fed for free. What do they do with all this debt they're picking up? They go resell it to broker dealers, pension funds, large hedge funds, other central banks are buying it. Whatever's unwanted, whatever they can't sell, is what really makes the magic happen for our strategy. Okay, so this is the Fed's balance sheet. So if you thought the last stock market rally of the previous decade was good, you better hold on to your horses because we're printing money at 5 times the pace of 2009. Let me repeat that. We're printing money at 5 times the pace of 2009 through 2015. Now, you can note in 2015, stocks still went up and we stopped printing money. Guess what? Europe and China took over at that time. These central banks have absolutely lost their mind. It's a huge power grab. If you don't understand what's happening, you're going to get crushed by inflation. If you do understand what's occurring, the goal is a massive wealth transfer to the super rich by devaluing currencies. So it's really simple. They take turns worldwide printing money so that financial assets almost always go up. And so let's just look at what every central bank has done. Europe started off with $2 trillion of money printing. Japan did $1 trillion. Now, China doesn't have a freely trading currency, uh, nor do they have a highly developed bond market. They're working towards that. And they're starting to steal a lot of wealth from America right now because we've suppressed our interest rates to about a third of theirs. But China is printing money internally at the same pace they did in 2015 and 16, which gave you that massive stock market rally from 2016 to 2020. And so the bottom line is every country worldwide is doing the same policy. I'm going to show you what the net effect of this is. Essentially, we are now creating price inflation on common goods at over 10% a year. So it makes sense, right? We go print money, makes the value of every dollar lose value. Okay, so that's the big picture. If we look at the last century, okay, except for the Great Depression, and remember in Europe, it was a decade-long depression. In America, we were spared the pain for quite some time. Eventually, it made our way, but the bottom line is the dollar's lost 98% of its purchasing power over the last century, and it's causing everything to rise in price. Here's a look at the cost of rent. You can see this is up over 350% since the 80s. If we look at the cost of medical care, it's up 550% since the 80s. If we look at the cost of just college, it's up 1,600% since the 80s. What about electricity? That should be getting cheaper over time, right? Oh no, it's skyrocketing up. It's up over 1,000%. So the bottom line is the reality is everything is going up in cost because the value of fiat currencies are falling. And it's because governments spend money they don't have, and they believe that's better than the alternative of going into an immediate depression. So if you understand what's happening, you may not like it, but if you can't beat them, you better join them. And what we're anticipating is not only a great return in the NASDAQ for the next decade, a better return. It could blow away the previous return. And why? Because the government's liabilities are growing over time at an exponential rate. In fact, we have over $100 trillion of liabilities in the United States, and there's no way in God's green earth we're ever going to collect enough taxes to pay for it. So their plan is very clear cut. They're going to devalue the value of the debt by devaluing the dollar. And all governments worldwide are following the same game plan. They're all in cahoots. Okay, so let's take a look at the trading plan. Again, we're sitting on a 7% return in December, 11% in January. And what's coming next? In the next 60 days, we're going to be shipping out $1,600 free money checks to Americans, and they're going to go rush out and buy call options on Apple, on Tesla, on Facebook. And so really what you want to do is front run this and get into your positions immediately, okay? Because the next melt up is literally weeks away. So let me walk you through our trading plan, and then we can build out customized portfolios. And we'll talk about the risks to owning tech stocks. Okay, in the long run, there's very little risk. They really have controlled the government. They're the number one lobbyist. In this election cycle, you just saw them flex their muscle. They really have taken control over everything. Okay, what are some short-term risks? Well, first of all, of course, at any point in time, there could be profit taking that creates volatility. Okay, if that is the case, we want to essentially have a crash insurance policy to defend against that and take away the pain. So I'm going to show you we call it the deflation hedge. And this is what happened in March. Okay, so this is just amazing how one easy position, we like to keep it around 10% of the account in low risk times. If we get into a high risk time, I'll put it up to 20 to 30%. So I'm actually thinking we're going to melt up to extreme highs in the next 6 months from these stimulus checks. And then that'll be a good opportunity to increase the hedging. But right now, we are just looking forward to an absolute scream higher in stocks. But let's just say for some reason, something goes wrong at any time. We don't care what the reason is. If you own 10% in UVXY, which we currently have 11, and the rest of your account went to zero in the crash of March, where we had a 34% decline, you topped out at around a 1,200% return in 28 trading days. And like Dean said, you could have netted out a 20% total return just with 1/10 of your assets being in the crash insurance play, which is what we're going to put you into right away. Okay, now the rest of your portfolio did not go to zero, and it quickly rebounded to extreme highs. The rest of your portfolio is up several 100% since that crash. But it just goes to show you what a smart hedging strategy can do to a deflationary risk. So what would cause deflation? Well, if all of a sudden we kept the country locked down for another year, that would likely do the trick. Or what if we hike tax rates too high and crush the economy? That would do the trick as well. So again, any kind of crash right now, we're looking as a buying opportunity. We want to cash out our crash insurance and buy more stock. So if I remove the percentage, you can see this was trading in the $10 range in February. Everybody thought nothing could go wrong. Historic trade deal with China. Okay, it was going to be the easiest trading of the year. And then boom, worldwide lockdown. Nobody saw it coming, a big panic. This climbed in less than 4 weeks from $10 to as high as 134. Okay, just remarkable. So our clients sleep like a baby during stock crashes while everybody else is panicking and running for the hills. You're going to hold onto your long side and have a big smile because you're seeing UVXY scream higher, completely offsetting the losses, cash out the insurance, and then realize what's going to happen next. Government's going to freak out, spend trillions of dollars they don't have, dilute the currency even faster, and create an even better stock melt up immediately after the crisis. Okay, so that's part 2 of our plan. Okay, the next 2 trades are going to be a currency devaluation play. So if the dollar were to really crash, I mean like seriously crash below some of the levels we've seen in the last 2 decades, that could become an ultimate crisis for everything. I'm talking stocks, bonds, the whole world economy. So if we really lost faith in the sovereign currency that the whole world runs on, the best hedge is to get off the system completely. Okay, and Bitcoin's our favorite way to do that. So currently we have a smaller position in Bitcoin. For every $1,210, we're putting clients $64 long GBTC. Now this puppy has gone up over 3 million% in the last decade because people are slowly but surely not trusting fiat currency. And we're actually anticipating this having a run up of about 1,000% from here, probably just a little shy of that. We're thinking this will be about a 3 to 5 year hold for this cycle. And again, it's a currency hedge. It's really the ultimate currency hedge. And then the last thing we really got to worry about with tech stocks and our deflation hedge is a real recovery. Funny to say, what could create some headwinds for us would be a true recovery. So if we go and overload the economy with too many freshly printed dollars and then reopen and everything's running smoothly, the cost of everything's going to rise rapidly, and that's going to show up in the bond market. The best way to hedge against true recovery is to actually be long oil. So XLE is the ETF in the SPY that is targeting oil and gas companies. And you can see they got crushed in March and they're still trading at a massive discount. So your portfolio is basically the top shelf tech companies up here in the candlestick. And then we have the value inflation hedge in our oil and gas companies. Now we went long aggressively this right in November, and you can see it's outperforming everything under the sun. We're having a little pullback because Europe went into extreme lockdowns, but the reality is California is opening up, New York's reopening up. So we're actually expecting XLE, which we're playing ERX, which is 2 times XLE, to outperform everything until oil gets to peak prices, which could be at least double where we're at currently. Okay, so let's put it all together. For every $1,200 following our program, we're going to start you off with a core position in the TQQQ. Okay, so for every $1,200 invested, you're going to have 828 or 8 shares long those key growth stocks. That's where we're going to really make the most money over the longest period of time. We're going to immediately come in and hedge that with about a 10% total position, just barely shy of that, by buying 11 shares of UVXY. That's your deflationary crash insurance. You'll be able to sleep like a baby in bear markets because you are completely protected. We're going to hedge against the dollar falling off a cliff, which it has been, by buying Bitcoin with a tiny sliver, about 6% of your portfolio, just a little bit lower than that. And then we're going to copycat Warren Buffett. So he's 80% Apple, 20% banks. Well, banks do well with rising inflation, but oil companies do far better. He's just trading so much money, he has to play it safe. So we like the oil and gas companies to play the reopening of America, which is happening right now. I really think ERX is going to be a screamer for our clients, and it protects your growth stocks at the same time. Now, let's say you wanted to try out 50 grand in the strategy. I just input that, and it's going to calculate 554 shares of UVXY, 330 shares of the triple Q, 83 shares of GBTC, and 496 shares of ERX. Okay, so at this point, what we want to do is build out portfolios live. And so right now we have Artist Dallas 1 and Dan live. And what we would like to do is get you to unmute your mic and see if we can build out your portfolio. I'm going to screenshot it and email it over to you. So Dan and Artist Dallas, if you're there, go ahead and try to find that little menu bar and unmute your mic. And we can talk about getting you a customized portfolio built out, emailed to you. And then you can either watch the paper screenshot prices over time, or you can put real money to work. Okay, Dan's got 40K to start off. Yeah, Dan, so what I would do is I would put 35,000 in the safe alpha, and then I'd try 5,000 in our boot camp. Okay, now the boot camp I haven't covered in detail. It's going to target about twice the return, sometimes 3 times the return, by going into smaller markets. Okay, so Dan, if you could post your email and phone number, I'm going to screenshot this and get it out to you right now, okay? And then you can build this out in your real account and test drive it. Watch what happens. We want you to pay for our subscription cost with the profits you generate. Okay, great. I got your phone number. Just need your email now. Okay, got it. Very good, Dan. And it's really, really amazing that we have accumulated over 1,000 members with this model. We give away the trades, you make money, and then you come back because you want to get the updates. You want to know when we're buying and when we're selling so you can maximize your returns. Okay, Dan, so you're gonna have 2 trade alerts coming to you right after the webinar gets out. We suggest you build it out so you can see it with real money, but if you want a paper trade, the screenshot does that. It shows you what prices we've recommended at this point in time, and then you can follow it every day and see what those trades turn into. Okay, Dan, so that'll go out to you right after the webinar. Okay, Artist Dallas 1, can I get your portfolio built next? And all you need to do is find the chat box and let me know what kind of test drive you're interested in, 5,000, 10,000, and we'll get this screenshotted and over to you. Okay, well, it looks like we got all the portfolios built for today, Dean. So I'm just going to go ahead and put this screenshot back up. So remember, we're doing quantitative easing at 5 times the pace of the last stock market rally of the previous decade. 5 times, and it's happening worldwide. So we're really excited for the short-term outlook. The next 3 to 6 months could be mind-blowing for this strategy. Okay, wonderful. So I think Dean's already busy talking to new members. So I'm going to go ahead and close out today's episode. We'll be back tomorrow, same place, same time. So if you have more questions, come back with them. Otherwise, we really appreciate everybody's live attendance and look forward to seeing you back tomorrow. And Dan, hope you have a great day at work. If you have any questions about the trade alert, just reply to the email that's going to send it to you, and I'll get back to you very quickly. No, Dan, this is a buy and hold. We want to set this up and let it rip. So yeah, the worst thing you could do is day trade this. You buy it, you sit on it. We're going to do 1 to 2 trades a month, and we're going to target no less than a 25% return. Right now, we're about to close off 25% in the last 60 days, just to put things in perspective. So yeah, we're totally about long-term investing. And but that doesn't mean you can't take profits any day of the week. So if you need to pull some profits off to pay a bill, then we sell the same unit of investment to take profits off. So you always have the same balance or ratio of stocks. But yeah, the worst thing you got to realize 90% of the profits are generated by holding overnight in the stock market. If you were to buy and sell at the beginning and end of each day over the last decade, you made 1/10 the profit you made by buying and holding, because most of the money happens with it gapping higher with manipulation in the futures market. A lot of people don't realize that. Okay, excellent. Well, we'll see you guys back tomorrow. And Dan, you're going to get that email. If you have any questions at all, just reply and I'll get right back to you, okay? All right, thank you guys. We'll see you back live tomorrow.